It would later emerge that there were insiders at PNB who were complicit in the crime. But that didn't stop the diamantaire and his uncle from fleeing the country. Later, Modi was arrested by the authorities in England and is presently in custody, awaiting extradition trial there. The same year, Chanda Kochar, then Managing Director and Chief Executive Officer of ICICI Bank, easily the most high-profile woman banker in India, found herself in the spotlight for all the wrong reasons. The woman who once headed the power rankings published by business magazines was suddenly battling seemingly insurmountable allegations of conflict of interest and quid pro quos for extending loans to corporate houses such as Videocon Industries, which had funded companies that her husband owned. The ICICI Bank board backed her initially, but later appointed former Supreme Court Judge B.N. Sri Krishna to conduct an independent investigation. The backlash from stakeholders saw Kochar fight a battle, which, ironically, bore testimony to her steely tenacity, because for the longest time, most of India was unsure as to how the tables would turn, given her refusal to accept any wrongdoing. In the end, Kochar had to bow out, and the bank's board accepted her resignation. If PNB and ICICI Bank exemplified overt instances of what banks were not supposed to do, the exit of Shikha Sharma from Axis Bank was a far subtler instance of the troubles that simmer beneath the surface of seemingly normal and healthy financial institutions. Sharma made no bones about pushing growth at Axis Bank, aggressively expanding branches and ATMs as well as corporate lending. But it all unfortunately came at the cost of asset quality, which weighed down her performance. Under her leadership, Axis Bank saw a 200% jump in its loan book, as well as its gross non-performing asset ratio. There were additional incidents that raised concerns. Violations of Know Your Customer, abbreviated as KYC, norms. Reports of bank employees advising clients on how to legitimize unaccounted money, and the arrest of bank managers during demonetization on allegations of money laundering. The result was that Sharma exited the bank in 2018, 2.5 years before she was supposed to, indicating that she had quite literally run out of time. The malaise wasn't restricted to large public sector undertakings, abbreviated as PSUs, and private banks. In 2019, it emerged that the Punjab and Maharashtra Cooperative Bank, also known as PMC, had colluded with promoters of real estate company HDIL to remit funds and loans without required forms and records, even when its own finances were shaky. Despite HDIL subsidiaries that kept defaulting, no alarms were raised, and the Reserve Bank of India, also known as RBI, never hit the brakes on PMC's operations, leading to an unprecedented situation where account holders saw their own money becoming inaccessible to them and had to protest outside RBI's offices before some assurances were made to them that the bank would be revived at a later date and they would get their money back. If banks were the obvious festering wounds infecting the economy, IL&FS, or Infrastructure Leasing and Financial Services Limited, was the mystery illness. IL&FS was unusual in that it was partly government-owned and partly a private equity firm, consisting of scores of shell companies and subsidiaries that its management set up. How had IL&FS dodged the combined glare of its audit committees, the members of which were from government agencies that included the State Bank of India, also known as SBI, and the Life Insurance Corporation, also known as LIC, as well as foreign investors from Dubai and Japan, not to mention regulators from the Securities and Exchange Board of India, also known as SEB.